The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. Markets roiling from the last few days in negative territory. This morning, though, we pick things up with a little bit of a reprieve. Markets in positive territory. There's your NASDAQ 100. 20,990. How about that line on that chart? You know where that line on that chart comes from, folks? You know where the line on that chart comes from? Check it out. July 12th. Right back to that area. Where did we hit? Now, you got to 20,983. You get within 7 points of that level. Pretty remarkable sometimes, the technical areas that you have in the market. So you hit there, you bounce a bit. We'll see if that rally extends today, and it's an important day, man. But look at these volume numbers, right? You're talking about escalating volume on the downside, folks. We did it yesterday in the NASDAQ 100, 793,000 contracts. You jump over the S&Ps. Now, S&P is not quite back to that level. That would bring you down to about 5,700 in the S&Ps going back to July. But nonetheless, look at the volume numbers actually picking up, right? Look at the volume day we had on Friday. Yesterday was more money. Now, you got a rebound in the middle of the day, okay? That's part of it for sure. But nonetheless, the pressure has been to the downside in this market. We'll see how today goes. And yeah, the main event after the bell with NVIDIA earnings. Dow up by 74 points or 0.2%. You got the Russell right now up by about 0.25% or 5 points at 21.81. Crude, you got to love it. If you haven't filled up yet, hang out for a few days if you can, because cheaper prices are coming. $68 this morning and 66 cents. My goodness, 68.66. You put it on a daily. It seems like we're heading back to the $67 area. We talked to our man Teddy Kegstad at 40 past the hour. Always a great conversation. We'll talk some currencies. We'll talk some commodities. We'll get Teddy's take on that crude market as well. Gold. Talk about a pullback, man. Yesterday, how about it? 29.60 to 28.97, up to 29.40. We're trading at 29.10 right now in the gold contract. Now, gold, of course, moving with what? Moving with yields, moving with the dollar. We were talking about yesterday. The dollar, one of the real stories in this market going on right now. And yeah, you jump over to the 10-year, and how about it? You talk about it, 4.3. 4.3, just like that. Remember the conversation going back to 5%? Not just yet, folks. 4.3, the yield on the 10-year right now. And we come into the dollar, catches a little bit of a bounce overnight to 106.57 in the dollar. We jump over to the VIX. 21.48 was the spike yesterday, still sitting at a relatively elevated level of 19.01 with the volatility index. All right, let's jump over to NVIDIA shares. So, NVIDIA, you talk about expectations. You're going to be up by almost $3 in the pre-market. You come into the opening bell. We take a look at this thing on a daily. Now, as I've talked about, you talk about volatility, man, from 153 down to 113. Yeah, about $1 trillion in market cap lost. You make back $750 billion in market cap. And since then, what did you just trade down to? 124 from a high of almost 144. It's almost $500 billion in market cap in the last, 6 trading days? Point being, I've been saying it many times, there are a lot of unknowns in NVIDIA, man. When this market can't peg the value of this company to the tune of $1 trillion to $750 billion, folks, this is just the last 6-7 weeks of trading. $1 trillion down. 750 billion up, 500 down. That's not even counting the bounce you got from January 14th to January 24th. Remarkable volatility in NVIDIA. And yeah, they got about almost a 9% move priced into their earnings. We go back to a 15-minute. So you're talking about almost an $11 or $12 move is what the market is pricing in. You got $130 equity. And what's remarkable is you think about it, right? So it's got, let's say, a $12 move almost priced into their earnings. Now, Just pulling it up exactly. Yeah, $13.30 as of the close yesterday if you want exposure through Friday, implied volatility. Okay, $13.30. The one day market maker expected move up here in yellow, $12.06. Point being, $300 billion in either way is what the market cap is expected to jump. Think about that, right? $600 billion range of where the market cap may rest for NVIDIA. A lot of volatility priced into this equity. We're going to take a look at some option trades in the next segment. I want to show you a couple of examples. Okay, when you talk about the type of volatility, I was talking to our man Jacob yesterday. We were talking about some example trades on NVIDIA. And boy, if you're selling volatility right now, you got quite an area that NVIDIA has set up because of the type of volatility in either direction that's built into this equity right now. All right, NASDAQ 100, we're up by 111. You're giving it up a little bit. That's a 15-minute. We're as high as 21,332, so you've slid about 70 points in the pre-market as we come into the opening bell, and we'll see where we go from there. All right, it is earnings season besides NVIDIA, and we got GM. They're raising their quarterly dividend. And how about a $6 billion stock buyback? Yeah, $6 billion stock repurchase program, $2 billion expected to be completed during the second quarter. That's a big number, man. Increasing their quarterly dividend by 25% to 15 cents a share, and that buyback as well. Not exactly earnings, but in jive with what's going on. And you're going to catch a bid by about $2, but all things considered, man, pressure to the downside right now on GM. All right, TJ Maxx, this company, man, they are a juggernaut. Look at this, right? Again, strong holiday, but issues weaker than expected guidance is the headline. But guess what? There's more going on because usually the market just cares about future growth. And yeah, they are liking what they're seeing. Fiscal 2026 comp sales to rise between 2 to 3%. The market was looking for 3.4 though. And earnings, they're going to miss as well. Surprising reaction. You don't always see comp sales miss, future earnings miss, and the stock trades higher. Comp sales between 2 to 3%, behind the 3.4, as I said. Yeah. And expecting earnings per share to be 87 to 89 cents. The market was looking for 99 cents. In the current quarter, they beat on the top and bottom line, though. Not bad. Net income for the 90 days, $1.4 billion. That's a business for you, man. Sales basically unchanged. Longer term, we see many opportunities to successfully grow our business and deliver even more value to consumers around the world. So they're going to open by about $5 to the pre-market, from the pre-market. And you take a look at this thing, you're going to be pushing 127. Man, put that channel on your charts, folks, if you're trading TJX. We'll push it to the right. Whoops. That's a weekly. The low starts in June of 2022. And check it out, man. We're coming up on 3 straight years. And look at this range. You're talking about, what, about a $17 to $20 channel to the upside? Well defined. On the top end, on the bottom end. And guess what? We're going to be pushing the top end again. You take a look at a little bit of longer term chart. TJX to the upside. The flip side of that chart, Coles. Can't catch a bid. Markets in positive territory. Stay tuned, folks. We're coming right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps up by 19, NASDAQ 100 up by 94. And yeah, taking a look at some of these NVIDIA volatility trades, okay? First of all, if you want to be a buyer of volatility, right? Let's say you say, man, listen, I know that the market's pricing in a lot of volatility for NVIDIA, but you know what I'm going to do? I'm going to be a buyer of volatility because I think even at these prices, volatility is underpriced. Now, more credit to you when there's a $13 move in either direction, okay? Now, these prices, okay, and the examples I'm giving here are predicated off of yesterday's close. NVIDIA's up $3 right now. So let's just pretend that NVIDIA is trading at 126.63. Option prices do not reset until the market open, okay? You're seeing bid-ask prices right here that correlate to where the market was at the close, okay? The market's going to reset. If you're trading options sometimes, it's the reason why I encourage you, if you're ever looking to get out or in of a position in an options market right at the open, you got to let the option market open for a minute. And man, you're going to get some extreme volatility, especially if the underlying equity is volatile as well. But you need to let that market open to basically figure out where it's going to price when you have movement overnight that has not been factored in quite yet. Now, if you want to be a buyer of volatility, what do you do? You basically buy a put and you buy a call right at the market. Now, there's more sophisticated ways of doing it, but that's where they get this expected move, okay? You buy a 126 call, which is almost where it was at, so you have all the potential to the upside. You have a right to buy it at 126. You buy a 126 put at the same time, so you're buying the right to buy it or to sell it, right? You just want movement. Well, that's going to cost you $13.53 when you add them both up, right? Because you're paying about $6.50 per side, okay? Now, to show you what that looks like on the chart, though, this is what your profit chart looks like. Just focus on the blue here, okay? NVIDIA trading at about 126, as I said, for this example. And as you can see, our max loss is at 126. Why is that? Well, our options expire worthless because all we do is we have a right to buy it at 126 and we have a right to sell it at 126. Well, our max loss on this example, 126. We lose it all. $1,353, okay? That's our max loss. Again, focusing just on the blue here. To break even, you lose money with this trade buying volatility in NVIDIA, just to show you how much volatility is priced in, okay? And you don't have to go both directions. This is being non-directionally biased. So you're paying for volatility in both directions, right? You don't start making money until NVIDIA trades below 112 or above 139. You've locked in a position where this trade is a losing position if NVIDIA, just by Friday afternoon, expires anywhere from 112 to 140. How about that? That is some volatility, okay? You say, okay, you look at that trade, you say, man, that's crazy. That's too large of an area, right? You say, I can't sell. I can't be a buyer of volatility if I need that much movement. You say, okay, that's great. Well, guess what? You can be on the other side of that trade. Now let's look at the other side of the trade. Okay, the other side, something like an iron condor. You're the one this time selling the volatility, and I've capped my losses. Okay, so basically what I'm doing is I'm selling a credit call spread. I'm selling a call spread to somebody else in the market from 128 to 132. Okay, and I'm also selling a put spread below the market from 140 to 124. Now again, imagine the stock's trading at about 126, okay? Our max profit here is if you have NVIDIA settle between 124 and 128. Now that is a tiny range on a stock like NVIDIA going into earnings, okay? Our max profit on a trade like this is the money you take in upon initiating it. Can't make more than $3.25 or $325 per a four-legged trade. Your max loss, which I find so cool on trades like this, okay, is only $75. Now, what's going to happen here? The reason why you're making $325 and only losing $75 is if you go per the market, there's a much higher probability that as of Friday, right, NVIDIA is going to settle below 120 or above 32 many more times than it settles between that $4 range you've created. But you see that you've now created a winning range from 120 to 132, and, right, your risk reward, you're only risking one to make, you're risking, one to make about four, right? Low risk, high reward trade, capped at your risk, but it is interesting when you compare those two trades. Now, there's multiple ways to set this up, okay? I've given it a $4 range, as in I'm responsible for basically the losses when NVIDIA trades from 128 to 132. I stopped taking the losses after 132. I'm responsible for the losses from 124 to 120. There's your slide down on the negative side. But guess what? As a result of being responsible for the price movement of this equity, whether it goes higher or lower, I've taken in $325 as a result of that. Now, we're going to go one step further, do a little options coverage on NVIDIA. Why not? What's so cool here is if you ever have the ability, sometimes executing four-legged trades can be difficult, right? Especially in illiquid equities. You might get it done in NVIDIA, so liquid, especially on an earnings day. But if you're ever trading four-legged trades and you have the ability to, now this may matter for margins, look into it, okay? Do your due diligence. Don't take this as the Bible of trading. Please do your own homework, okay? But in general, executing four-legged trades sometimes can be difficult, right? Not as liquid, of course, as single options or even doubles. So what you can do here sometimes, if you want to put together a trade like this, okay, is that you can do each side of it. You can basically sell a credit call spread. So you just initiate the call side of it. You sell a call above the market and you buy one back a little bit higher to cap your losses. And then you do the same thing on the put side. So you basically execute two trades. You break it in half, because what's cool is here, if you go over to the Thinkorswim platform, you right click on your trade. Now I'm in the Analyze. You can actually see the market depth for complex trading instruments. Okay. And we're talking about the market depth for, I have a bunch of these up. Hold on. Look at how many times I've done this. Let's do it one more time. There we go. Your iron condor in NVIDIA. And this is not exactly real, but what will happen here, folks, you can right-click. You can see the market depth for even four-legged option trades, okay? Now, what will happen here is you're not going to have market makers, they're looking at the individual options, right? They're going to execute you when they can find a profitable arbitrage from the bid ask on each option trade. But what does tend to happen is trades like this, you have a bid ask that's wider than you may anticipate. So something to think about. But boy, how about that, right? And on the flip side of it, I like that chart. You're telling me I can't make that trade, folks. You making that trade, you buying volatility when you lose money on NVIDIA from 112 to 140. Remember those numbers, 112 to 140. It's Friday. We'll see where we are tomorrow. On the flip side of that, and then you got the Iron Condor there where you're risking 75 to make 325. And there you are selling volatility. So lots of options plays coming into NVIDIA. Nice little lesson. Hopefully that added to some of the way you think about some of those option trades. All right, we're coming back for the opening bell, folks. We got markets in positive territory. We got a lot to talk about. Stay tuned, folks. We'll come right back.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are February 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets right now. Oh, it's not cooperating with me. Come on. What are we doing here? Forgive me, folks. What is happening here? There we go. There we go. All right. S&P's up by 11. NASDAQ 100. I was trying to get it because you can see the market's giving it up right now. Boy, remember when there were the days that you could buy any dip? Is this the day where you can sell any run higher? right? Because, boy, we've had some rallies. But look where we were in the NASDAQ 100, man. You were up to 21,332. We are down 140 points almost, just like that. We're coming into that chop that we had yesterday afternoon. You jump over to NVIDIA shares right now, and we are up by 3%. Yeah, not NVIDIA, man. NVIDIA on the opening bell, up by 3%, up $4 right now. And you see, so for those examples we were talking about there, okay, here's the dicey part about when I was just showing you selling a volatility trade like that. As of the close yesterday, we were at 126 and change, right? There's a reason why, folks, okay? Now, here's what's so cool. Look at the credit and look how things changed, even though we haven't even shifted. The stock just popped $5, and this trade almost lines up identically, okay? It should have shifted dramatically here. But guess what? There is so much volatility priced into this equity. And sometimes what I find, okay, is that when you make plays like this, where you're selling volatility, sometimes you'd be surprised, even the day after earnings, how much volatility is still priced into some of these options when you go to trade them. But we'll keep our eye on those. And yeah, it's going to be an important day for all of the big equities out there. Let's jump around. You jump over to Apple shares. Down by 1.3%. You jump over to Microsoft. Microsoft, by far NVIDIA's biggest customer. What's going on here? Microsoft just dropped $6, man, from where we were pre-market. You're down by 0.8% right now for Microsoft. Google shares are dropping as well. Not what you want to see, man, right? Google, below yesterday's lows. Microsoft, below yesterday's lows. Not Amazon. Amazon catches quite a bit. Different story. Up by 1.1% right now. Tesla shares. Yeah, chopping around near $300. Watch out for Tesla, man. How about Meta? Up by about 0.4% right now for Meta. All right, let's jump to Lowe's. Lowe's out with their numbers, strong numbers, but you rip lower on the open. We're up by 1.2% for Lowe's. Okay, take a longer term look at this equity. It's been on quite a run, but we're sitting where we were in 2021, right? You talk about a consolidation. You trade from $60 to $260, folks. You've been in this market long enough. My dad would say it all the time. The market needs time, right? It needs time. It needs time to breathe. It's got to consolidate. And here we are pushing those highs, but strong numbers from Lowe's. We jump over there. Starts to break out of the sales slump is how they put it at CNBC. Nonetheless, they beat top and bottom line. $1.93 versus $1.84. Revenue, not bad for 90 days. $18.55 billion. How about that number, man? Comp sales for the quarter rose 0.2%, boosted by online gains is how they put it. But yeah, so they get a narrow beat. They're up by 0.6%. You jump over to Home Depot shares. Pretty similar action, right? Chopping around near the highs of 2021. After quite the pullback, we're sitting at $391. Home Depot slightly in the red. Target shares. Now, this one was an interesting one. If you listen to the program, you know I'm a fan of Target. Tommy and I, we enjoy rolling around Target. It's kind of the Toys R Us experience. Now, he's getting older. Things are changing. He's 4 years old. Not quite the deal. When he's a little guy, he's not a little guy anymore. He's a big guy now. When he was a little guy, we'd roll around those toy aisles, and he would just play. And sometimes he does now. But nonetheless, we spent plenty of time in Target. And so they're going after apparel here. They strike a deal with Champion. Okay, now I've bought in plenty of items in Target. What struck me here is most of the items are going to cost less than $40. Well, they better. They better, man. I'm not going to Target to buy a Champion shirt or sweatshirt or sweatpants for $50, okay? I think that number should be even lower when you're talking about Target. I really do. 500 items is what they're going to carry. It's going to start in August. And, yeah, they're looking to grow apparel. They have a decent apparel line. They do. I roll through there. You know, Walmart as well. They've really expanded what they deliver. Not sure Champion's going to be a make or break for them, but nonetheless, they're beefing it up. Shoppers have remained selective after years of feeling pinched by inflation. Yeah, $25 seems like a good area, man. You know? I go into especially you're talking about Champion, okay? Champion, to me, sweatpants, which is great. They're like the the ideal, affordable, I was going to say cheap, apparel brand. Nonetheless, Target shares, they're flat today. We jump over to Walmart. Quite a day yesterday for Walmart, and they do it again today, man. You got a little bit of a rotation here. Walmart up by 0.8%. Clawing back some of the losses they had from their earnings. And you get that gap out there. Coming into the bottom of that gap from their earnings, you're sitting at about $98 for Walmart. And yeah, quite a little rebound for Amazon. Up by a full percentage point right now. When you got Apple falling off by 1.9%, you got Microsoft off by 0.3%. But NVIDIA, strong like bull. NVDA, yeah, up by 3% at 130.28. All right, what else we got going on here? We talked GM, talked Lowe's. Yeah, we got the potential for a tax cut. And that was the article. Tax cut chances rise as House passes budget safety net. You know what? Here's what I'll say about this, man. I'm not a fan of Thomas Massey. He's a Republican from where? But you got to admire a guy who's the only guy that votes against all the Republicans with Trump in office. And why is he doing it? He's saying, man, this is bonkers. We're not saving any money. Okay, that's what he's saying. And I tend to agree. Huge tax cuts for the wealthy, and then you have a number in there that they're going to cut, and it's still going to add to the deficit in monumental proportions, folks. But yeah, not a fan of him, but hey, there's something to be said about having your convictions and being the lone Republican out there. You know he's going to face heat, and he does it anyway. And yeah, I look forward to Tommy in the future, man. You're talking about deficits. You can't right that ship just through tax cuts for the top earners, folks. I know it's got to be both ways, but still, the plan's going on. Add to the deficit decades and decades into the future. Pretty remarkable. All right, S&P's up by 18, NASDAQ 100 up by 98. Let's check back in on yields right now. Look at that higher price, man, on a weekly basis. Look at that break we got going on, right? That is a decisive break. We're 3.5 points off of the lows that we were talking about, and you got a 10-year yield sitting comfortably at about 4.3. We got a 4.29 handle now. With that 10-year yield, you put it back to a 15, 30-minute, yeah, pushing the highs we had yesterday. You got a 4.2 handle on the 10-year. And we got the dollar chopping around at 106.50. Checking back in on gold, pushing the lows at 2,900. Yet again on gold, 29.07. All right, folks, stay tuned. Perfect segue. We're going to be coming back with our man Teddy Kegstad. We'll talk some currencies. We'll talk some yields. We'll talk some commodities. Always a great segment. Don't go away, folks. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps positive by 13, NASDAQ 100 positive by 63, Dow slightly in the red right now. We got some market volatility to kick things off, and we got the dollar at 106.52. And as we do each and every Wednesday at 40 past the hour, we're going to talk to our man Teddy Kegstad. And folks, if you haven't checked out Teddy's outstanding weekly Forex report, the Tiger Forex report, new issues out every Monday. Updates throughout the week when warranted. It's only $97, and you can get it with a 30-day money-back guarantee, folks. Check it out. You get access to Monday's issue, of course. You get the newsletter for 30 days. You can cancel it any time. Teddy's got some outstanding insights in there. I was reading it, of course, Monday, and we're going to talk to him about it right now. Teddy Kegstad, good morning.
Morning, Tommy.
So, boy, we have some action, of course, Teddy, in this market. You know, I always love your letter, and you had some great calls this week, as usual. But we have the dollar 106.50. We got crude with a 69 handle. What are you looking at most in this market? Where do you want to kick things off, Teddy?
Well, I think we have some interesting divergence going on right now. I mean, you have the dollar is very strong while yields are pulling back. So I think we're going to have a little rubber band effect coming up soon. So right now, it's very interesting to see how the dollar's strength is today. I think a lot of it has to do probably with the stock market being a little bit on edge. I think that's really where you're seeing a flight to quality there. It's the only thing that really makes sense, as far as how when you look at the different, FX crosses and where they're trading. I like the influence of crude, on the U.S. dollar yen. It's still trading below 150, and I think that that's going to hold, especially with yields retreating and also with crude also banging new lows, which I think crude might have a nice little sell-off over the next probably week or so.
I wanted to ask you about crude. In your newsletter this week, I read it Monday, it hit me, and I pulled it up again today because the action we have especially. Folks, this is saying crude oil bears are set to bring down the price of crude. New move lows are on the horizon, and great call, man. We're at 68.82, and my next question is, how low do you think we can go, man? What do you think about this market? Because you talk about cheap prices, man. I'm saying I'm going to wait to fill up my gas tank right now, Teddy, because it seems like they keep dropping it. What do you think of crude, even at these levels? You looking lower from here? What do you think?
I am. Well, if you look at the momentum that we've had over the past few weeks, we came off of a nice swing high, and the direction has been lower move lows and lower swing highs over the past month. And I think that I don't think we're going to see a very sharp decline, but I think we're going to continue to see an erosion where the trend is going to continue lower. So I think we could probably see us getting down to probably the 66 to 64 level sometime in the next few weeks, for a spike, and then start to set a range where we'd probably bounce between 64 and 68. I think that where we're trading now is going to be the upper end of the range when we're probably 2 months from now when we're looking at where crude is going to be at.
So tell me this, am I going to be paying less, Teddy, for a gallon of gasoline than I am for a 20-ounce bottle of Diet Coca-Cola for $2.69 in Publix? Pretty crazy, right?
I think it is coming up. Now, the one thing we do have to worry about with gas is that you're going to have the rotation with the refineries coming up from the winter blend to the spring blend. So, but that doesn't come for another probably. I mean, we're at the end of February. We still have about a month and a half or so, which that would be good. So we'll see a break in gas prices, then see a little spike, but that's just a refining thing, which will then, gets resolved after a week or two.
Nice. Hey, I want to jump to bonds because you in your newsletter, you go, I love it. I mean, I'm always watching bonds, crude, of course, the dollar. They all tie into so much, but you're talking about bonds, man. You have in there time to press yields to the downside for a bit. Folks, check out Tiger 4. You had some great insights this week, Teddy, especially. I always do. But we're getting the move, man. We're getting the move. And where do you think we can go for yields? Because we got quite a pop in price. I got the 30-year up here. We're up to 117. We were at 110. When? January 15th in price. Where do you think we have potentially to go with yields going down for a bit? Are we kind of at that level, or you still see some more room there?
No, I still see some more room. And one of the reasons I do is because if you look at last week and this week, we really didn't have very many numbers. In fact, unemployment claims was the biggest number last week. Pretty much is the biggest number for us also this week, So when the market doesn't have a lot of numbers to go on, and especially with no real other fundamental news hitting it, right now the market's doing what the market wants to do, and that's saying that right now traders are very bullish, meaning they're bearish on yields. And I think that most of the move, I believe, is done. But I do believe that we're going to probably see it stretch for another week or two, especially as we roll into March. Remember, we're coming into the end of the first month of the first quarter. So, and we also have the expiration for financial contracts coming up in 3 weeks. So I think we're probably going to start to cap out, probably in 2 weeks from now. But I would say that probably right now, like the bonds are trading, at 117, 22, 23 right now. I think that they can get up another at least handle and a half up to 118 to 119 area. Then I think you're going to start to see a little bit of, if you see a rally beyond that point, I think it's going to get very spiky. I mean, we're looking at a range trade situation. The market still is commanding higher yields. So I think what we'll do is see that spike over the next couple of weeks and then start to see yields come back up again. Nice.
And, I was just looking at the charts as you were talking about it. Just the moves are remarkable, of course, but not that outlandish when you think we were all the way up to 120.18 on the 30-year December 6th, which is crazy. Mm-hmm. Not that long ago, for sure. You talked about the dollar yen and crude. I'm pulling it up right now. What do you think about, we're right at, which I found so interesting, where we were December 3rd on the dollar yen, right? You came down to 148.64. We're within $1 of that price point. It's nice you're at that technical point when I look at things on a chart, Teddy. If I'm trading, it's nice you have your back against the wall a bit. But beyond this point, I mean, you're in the middle of this range where we had 140 in September. We had 161 last July. We were just as high as 158. Longer term, do you see any shift somewhere with the yen sitting at about 150? I know you just talked about it, but what do you think about that as we got the gold bugs out there always watching it?
Sure. Well, 150 is the key level that the BOJ is watching. It's where they want the U.S. dollar yen pair to be at that level or lower. And I think they're going to get their dream on that one. I think that the only time you're going to see the U.S. dollar yen spike back up is like if we see interest rates rise again. We see, a few handles sell off in the bonds in the 10-year. Rates go up a little bit. That's the kind of thing that would drive it up. Also if crude gets a rally, I would look for those as spikes. I would look at those as rallies to sell. Otherwise, I think that for the main course, I think over the next few weeks to actually the next couple of months, you're going to see the U.S. dollar yen trading probably below 150, trying to get down to that probably, well, I would say 146 to 145 area. Now, that's the big key is if you can hold down at 145, that's a pretty significant sell-off in that area because you're probably going to find a lot of support around the 148 area. So it's not like we have that much further to go, but if you look at the ranges also in the U.S. dollar yen lately, they're not that wide and they're not really getting that much of a movement either. There's not much of a slope to the trend.
Nice. Yeah, pretty remarkable, man. I think we got volatility everywhere in this market, which I think is so cool overall.
For
and then we got
sure.
NVIDIA earnings jumping around tonight. Teddy, man, that was a quick 9 minutes. I appreciate the update as always. Folks, go over, check out that Tiger Forex report. He's got a couple of great webinars under the services tab as well. Teddy, we appreciate it. We'll talk to you next week, man.
Thanks, Tommy. Take care.
Thanks. Folks, we'll be right back. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Always a great conversation with Teddy. We got the S&Ps up by 33 points, back above 6,000. NASDAQ 100 trading up 149 points. You want to see something? I was talking about it yesterday. On a monthly basis, folks, everyone's freaked out about the rollover in this market, right? We don't even have a red bar on a monthly basis at the tops yet. The only 2 red bars we have in this market, going back almost a year to last April, are in July and October, and those are small red bars, man. Yeah. These are small red bars, okay? We got a little bit of a rollover on a daily basis. Different story, of course, challenging the levels we had from July. On a weekly basis, different story as well. A little bit of a consolidation, you could say, basically from December. You get the acceleration during the election up to this price point. Okay, we're right back into that bar. But yeah, on a monthly basis, folks, the fireworks are just beginning, okay? I think we're going to have a two-way market with volatility persisting for some time. And keep in mind, when you talk about, man, that is a rip-roaring decline. No, it's not. We don't even have a red monthly bar. We don't even have a red monthly bar, folks. And we got only a couple trading days left. That bar on the NASDAQ 100 would put you at about 21,200 is where we opened. We're 100 points higher right now in the NASDAQ 100, 21,298, but the market catching a little bit of a bid to kick things off. We jump over to NVIDIA shares. Big day for NVIDIA and big day for everybody else. It's going to be interesting to see what happens on some of the other stocks, right? When you talk about Microsoft spending so much money with NVIDIA. If NVIDIA is going to be taking in less money, is that going to be a good thing for Microsoft because they might be spending less? Or is it going to be a bad thing for Microsoft because all that money that they were spending was getting factored into growth on the earnings side? Can't wait to see how the market digests that because you have a bunch of layers. How many layers deep are you going to go, right? We'll look for NVIDIA numbers, but of course, you're going to see some action across the board with some of these big cloud providers as well. All right, folks, thanks so much for kicking off your trading day right here with me. Stay tuned. I'm coming back for the top of the market, top of the hour market update. Then, of course, we got our man Steve Rhodes, Fast Market at 12. Larry Pesavento, Jacob Shoup this afternoon, and Jacob's going to be streaming NVIDIA earnings live at 5 o'clock after the program as well. We got a great day planned, folks. Stay tuned. We're coming right back.